Hello and good afternoon, everyone. My name is Jeanette and I'm from the Consumer and Investor Office at the Securities Commission Malaysia. Welcome to today's InvestSmart Online Series webinar. Today's webinar is on Introduction to Environmental, Social and Governance ESG Investing. First of all, we would like to thank everyone for taking the time out to be here today. Next. We are pleased to have with us today Ms. Wong Hui Yin from Bursa Malaysia to present on the topic Introduction to Environmental, Social and Governance ESG Investing. Allow me to share a brief background on Ms. Wong Hui Yin. Hui Yin oversees the index business for the exchange and manages the communication with stakeholders on index-related matters. She is responsible for uncovering new opportunities in the index and sustainability space to ensure Bursa's index and product offerings continue to serve the needs of the local market participants. Hui Yin has over 20 years of experience working in Bursa and has spent her earlier career managing data and supervising Bursa's in-house index operations. Now, please stay tuned till the end of the session as we will be having a short Q&A followed by a pop quiz session for all participants. As mentioned earlier, total of 1,500 ringgit in online vouchers are up for grabs. There will be 5 top winners and 20 consolation prizes. Winners will receive the email within 24 hours. Next. Before we start, just please do follow us on our social media platform for useful information on investing and latest updates on our initiatives. Now I will pass over to Ms. Wong Hui Yin to share her presentation. Ms. Wong Hui Yin, you can take the floor. Thank you.
Thank you, Jeanette. A very good afternoon, ladies and gentlemen. Sorry for the slight delay. Okay, firstly, I would like to just extend my thanks to the organizers for having me here today. Like what Jeanette introduced, my name is Hui Yin. I'm from the Index and Sustainable Business Department, which is part of Bursa's data business. We're actually the commercial arm of the exchange. So Jeanette just briefly mentioned just now, I oversee the index development and I also talk about sustainability, ESG to the market, and that includes this ESG index. So when we talk about sustainability, ESG, socially responsible investments, so this is something that the market talks about frequently. When you flip the newspaper, you see it, every other day, somebody will have a conference talking about this, So what is it actually, So we have actually come a very long way since the days when people associated all these terms with CSR, charity, philanthropic activities. ESG is not just about that. It is about the way you conduct and manage your business. And when you embed environmental, social, and governance elements into your business model, your portfolio selection, your investment decisions, you are basically building in resilience and ensuring sustainable returns. So the topic that I'll be covering today is very much centered around Bursa's ESG index, the FTSE4Good Bursa Malaysia Index. I hope that by introducing this index and explaining the construction and methodology behind this index, investors that have interest in adding an ESG filter for their portfolio selection can use and reference this index and the corresponding ESG ratings as the point of reference to kickstart your ESG journey. So just let me give you a little bit of background. When it comes to talking about ESG index, right, usually the audience that I usually engage with, or my team usually engage with, are the companies, the listed companies or institutional investors. This is actually the first time I've been invited to talk to retail investors about FTSE4Good Bursa Malaysia Index. I'm very delighted that we have actually landed here, and I hope that this will be the start of many other retail engagement on the FTSE4Good Index. So let's start. Next slide, please. So this is how the conversation will be guided. I have some points I want to get through, which is first we will go through the ESG landscape. Then we talk about the FTSE4Good Bursa Malaysia Index, and then we deep dive into what the ratings model is all about, FTSE Russell's rating models, and we'll just go through some index constituents and overall ESG scores. So let's begin. So before we jump into it, next slide please. Just go through who we are, Bursa Data Business. We are the data commercial arm and we do data strategy and management. So we do the market data licensing, we do index development, we uncover sustainable business opportunities, and we leverage on data to create new products. So this is who we are in the exchange. Next slide, please. So like what I mentioned, I am overseeing index for the exchange. So for those who may not be aware, there are actually two sets of index that Bursa offers. One is an in-house calculated one, the one in blue, and the one that is in maroon color, that is in partnership with FTSE Russell, our index provider. So the one that is in-house calculated, as you can see, there are 13 of them and it's all sector-based. So for as long as a company is classified into a particular sector, they'll be eligible to be included into the index. So there are 13 altogether here. And the one that is in partnership with FTSE Russell, this is the one that you guys will be very familiar with, the KLCI, which is the headline index, the mid 70, 100, and we have the Sharia index. So you have the thematic index, right? You can see the from 9 to 16, those are the thematic indices. And number 14, FTSE4Good Bursa Malaysia Index. This is the ESG index. This will be where our conversation will be centered around mostly. So this index with FTSE Russell is actually reviewed twice a year, once in June and once in December. Next slide, please. So we go through the landscape, why it should matter to you. Next slide. Okay, why should an investor consider ESG when you invest? So there are three key points that you should always remember. Number one is outperforming returns, because you have to be aware that you are actually investing in a space where there is a lot of funds, large funds that is focusing their efforts and investment strategies on. So this will lead to a more robust trading activity and more vibrant trading and more liquidity, and usually that will translate into price appreciation also. And just to further confirm this fact is that our ESG index, the FTSE4Good Bursa Malaysia Index, it usually outperforms the KLCI by around 3%. The second point is that ESG improves companies' financials. So companies that has good ESG practices has traditionally been proven to be more resilient, because you have good governance in place, right? And you also manage resource scarcity, and there's always some initiative to innovate to future-proof your business. So all this, of course, again leads to a more sustainable business in the long term. And another thing to consider is that inaction is not an option, because some people are saying that, okay, let's just hold on for a minute as I work to improve my bottom line. I will just not look at how to embed ESG criteria when I do business. No, I will just do business as usual. But this is really not an option, because as you know, our public listed companies, we are all basically intermediaries, suppliers to MNCs, most of them, right? And when you supply to MNCs, they hold you to a certain standard, and they will want you to display certain ESG efforts before they even onboard you into their supply chain. So, and also you need to anticipate that there are increasing regulatory requirements that needs to be factored in. So all this will eventually, you will need to adopt. It's not something that you can just say that, I will wait and see, and I will see whether or not it makes sense. It makes sense to start now. So that's why a lot of companies have already started their journey, and those that have not run into the risk of getting excluded from the supply chain. And of course, lastly, this is something that everybody talks about, positive impact to environment and society. So when you invest into companies that have good ESG performance, you're basically saying that you're endorsing and supporting enterprises that will bring positive impact to the planet, to the society. Okay, so next slide, please. So this is the future outlook, ESG, how important it has become. Deutsche Bank actually believes that by 2036, almost 100% of ESG integration will be seen into the fund management industry. And back home, the banks, HSBC, Maybank, and CIMB have all come out with statements to say that they are moving away from financing coal projects, right? So the companies that are not adapting or not transitioning may find themselves deprived of financing opportunities. And EPF, our largest asset owner, has said that they want all their portfolio to be ESG compliant by 2030. Next slide, please. Again, another view. This is the global landscape of how much ESG investment has grown. The top chart there, the one that is in green, shows the investment that is tracking ESG that's being managed in accordance to some ESG principles or standards. So when we first started tracking it, at the small dot there, it was about 2.6 trillion, if I'm not mistaken. So based on the latest figure that we have, 2018, the investment size has grown to 30.7 trillion. This is a really significant move towards more ESG integration. And you look at the bottom left chart, PRI signatories. So PRI stands for Principle for Responsible Investments. So when you sign on as a signatory, you're basically saying that your organization has put in commitment to look into ESG when you do your investment decision, portfolio allocation, and such. So back home, you can look at the names that have signed on to the PRI. You can see EPF is there, Corp is there, Khazanah is there, and the list is growing. And globally, we have close to 4,000 signatories on board. And another view is that we look at the pension funds, which is where the largest asset owners are. So out of the top 10, 7 has said that they are already incorporating ESG considerations when they do their investment decisions. So this is why it's so important right now. Next slide, please. Okay, so we talk about our ESG index, FTSE4Good Bursa Malaysia Index. Why did Bursa decide to launch this? Because, like I said, this was to support investors who were looking for an avenue, to look for good companies that have good ESG practices. So support investors in integrating ESG factors into their investment decisions. And of course, we wanted to profile and recognize companies that have done well in this space. And by doing so, we want to encourage more and more companies to be onboarded into this ESG agenda. This is a 6-year plus index. It was launched in December 2014. And we were very proud to say that we are the first in Asia to be part of this globally benchmarked FTSE4Good Index series. And the environmental, social, and governance criteria that is put out in this index is actually very closely mapped to global standards like the GRI, the CDP, TCFD framework. So these are all the terms that you would definitely hear or read about when you flip through papers when you talk about sustainability, especially when it comes to climate change issues. Right, TCFD is the standard, the golden standard right now that people adopt and adheres to. And the thing about this assessment, ESG assessment, is that it is done based on companies' publicly available information. So it is not a survey that our index partner sends out to companies. They will have their own researchers sitting in the office looking through information that is found in public domain. And when I say public domain, it means the annual reports, sustainability report, and the corporate websites of companies. So this is where they get information to see how the companies are addressing their ESG issues and what are the measures they've put in place. Next slide, please. And of course, key benefits, why would a company aspire to get onto the index? Of course, this is, like I said, recognition, because that there is a lot of interest, not only locally but globally as well, for funds, asset owners looking to invest in companies that exhibit good ESG performance. So you're attracting the funds into your company. And also, we are getting more and more traction from banks, financial institutions, to use all this as the qualifying criteria for their loans. So if you are exhibiting good ESG behavior, or you qualify into the index, or you're in the crowds of qualifying into the index, you may get preferential rates, in terms of financing and such. So this is the value proposition of why companies are aspiring to get onto the index. So, okay, next. So we are going to go a little bit more technical right now. So it is about the index, how it's constructed. So when you understand the methodology behind it, perhaps you have a better appreciation of how you can reference this index and the constituents, to ensure that you integrate some elements of ESG when you do your investment. So next slide. Okay, just now, in the first few slides, I explained that there were a set of index that we run together with FTSE Russell, right? So this is just another view of how the index can be structured. So the three blue boxes are the tradable index. You have the KLCI there, the 70, the 100. Okay, these are the tradable indices. And then when you merge the 100 with the small cap, you get the larger base FTSE Bursa Malaysia EMAS index, the one that says parent index. So whenever we Bursa rolls out any new index, thematic index, the base for it is always the parent index, the FTSE Bursa Malaysia EMAS index. So in order for a company to be eligible to be included into any thematic index, and that includes the FTSE4Good Bursa Malaysia index, you need to first qualify into this EMAS index. Okay, so next slide. So I'm going to explain how a company can qualify into the EMAS index to begin with. Okay, so you start off with only main market companies being eligible. So and then you have to be filtered for investability. So when you talk about investability, it is market cap, number one. Number two is free float. Number three is liquidity. So let me just briefly go through. Market cap means a company, they want to ensure the company is sizable enough. So for inclusion into the EMAS index, a company needs to be in the top 98% of the main market's market cap. Free float, you need to have at least 15% of your shares to be freely available for public to trade. And liquidity is to ensure that the shares are consistently traded through a period of 12 months. That's the liquidity rule. So 780 companies, we have approximately main market companies listed. And at the last June review, when you go through this three filter, we have 300 companies that qualify into this EMAS universe. And like I said, the review is done semi-annually, once in June and once in December. Okay. So after that, next slide. Once you qualify into the index, that's the top base, FTSE Bursa Malaysia EMAS index, we have 300 there. Then these companies are given a second layer of information, which is where the ESG scoring comes in the picture. So they'll be assessed in accordance to the FTSE4Good Ratings Model, which I will take you through later to explain what the ratings model mean. And companies are given an ESG score of 0 to 5. 0 being there is no ESG disclosures found whatsoever in the public domain. 5 means you have the best practice out there. Okay, 0 to 5. And then finally, we look at the three boxes that this is the inclusion criteria. So first, once a company gets rated, they'll check through your business. So for FTSE, there is a very simple exclusion. They only exclude tobacco, weapon system, controversial weapons, and coal. So these are they only exclude 4 activities from their index. So for as long as you're not involved in this, any of these 4 businesses, you're good to go. Then secondly, the inclusion threshold. So just now you're given an ESG score of 0 to 5, right? So in order for you to get included into this FTSE4Good Bursa Malaysia index, you have to fulfill 2.9 out of 5. 2.9. Okay? And of course, the second criteria is that after you fulfill the 2.9, you must address all significant or material ESG risks that is deemed important to your line of business. I'll explain later what it means, but basically, they just want to ensure that after you meet 2.9, anything that is fleshed out as being material to that particular industry, you are addressing it. Okay. And lastly, controversies. Companies that have exposure to significant controversies, even if you meet the inclusion threshold of 2.9 or higher, you'll still not be eligible because this is an ESG index. So they would want to keep companies that have proven records, that do not have controversies into the index. So 300 companies, ESG score, inclusion threshold, exclusion criteria, all this we have, and we end up with 76 companies that qualify currently into the index. So we have 76 constituents currently in the FTSE4Good Bursa Malaysia Index. But all 300 companies in the EMAS universe has an ESG score. Okay, so this is something that I want to emphasize. You have reference to 300 companies ESG ratings that we publish on the website. Later, I'll take you through how it looks like. Okay, next slide, please. Okay, we are going deeper and deeper into the model. So bear with me for a while. This is just to explain, that when it comes to ESG ratings, it is not just somebody scouring through some write-ups and then just, okay, I like your write-up, I give you A, and A translate into 2.5 and such. No, it's not like that. It is very transparent, it's very objective. So this, I'm just trying to give you a sense of how the ESG ratings is constructed, and so you can get a better appreciation of the work that goes into the ESG ratings, and you will have a level of comfort when you make reference to them for any of your investment decisions. So there is 3 pillars, right? E, S, and G. So let me just quickly read through what are the theme that is for environmental. So you have biodiversity, you have climate change, you have pollution and resources, you have water security, and finally, you have environmental supply chain. Okay, and for social, you have customer responsibility, you have health and safety, human rights and community, labor standards, and social supply chain. Lastly, governance, you have anti-corruption, you have corporate governance, risk management, and tax transparency. So these 14 themes make up these 3 ESG pillar. And then from this pillar, you roll up, you get 1 ESG ratings. So for each of this theme, a company is already pre-assigned an exposure level to the theme. So an exposure level goes from 0 to 3. 0 means that particular ESG risk, that theme, is not applicable to your line of business. You don't need to worry about it. No, even if you disclose it or don't disclose it, it's okay. Because it's not something that is material to your line of business, it's okay. Whereas when you go further up, number 3, high risk, that means you have a very high exposure to this ESG risk. You must address it. Otherwise, you stand the risk of not being included into the index. So all these are predetermined, and then the score is from 0 to 5. 0 means you did not disclose anything to say that you are managing this ESG risk. 5 means that you're on the ball, totally on the ball. You have matched everything that they need, all the criteria, all the indicators that FTSE sets out that you have to meet, you have met. So that's you score ratings of 5. So next slide. So just now, I just roughly mentioned, it is predetermined, right? Your theme exposure is already predetermined based on your line of business. So this is just to give you a sense of what it means. So generally, companies that are in the same line of business will have the same exposure level. This is predetermined by FTSE based on their assessment of the situation. They have a index advisory committee that looks into all this methodology, and they fine-tune it as and when required. When there's any development, major development and everything, they look into this theme and say, oh, okay, maybe it's time for us to ramp up maybe climate change, for this particular industry and such. So this is something that a decision they make, and they apply it across for all the companies that they assess, which is not only Malaysian companies, it's global companies. Okay, so let's look at the 3 examples that I take. It's pretty diverse. So I'm looking at financial companies, could be banks, could be insurance companies, telco, and property. So you can see the one in white are the ones that you will not be assessed on. This particular ESG risk is not applicable to your line of business. So you can see for finance, right? Most of the E and the S is white, right? And then you have some exposure to climate change, the low exposure to human rights and everything. But for banks, the high exposure is the risk management and such, right? But whereas you look at property, which is on the extreme scale, you can see a lot of red boxes there, right? So that means property companies, because of the nature of the business and how they do property development, no more detrimental to the environment and such, they are compelled to do more to manage all these risks that they put forward, when they do business. So you can see when it comes to environment, it's a lot of red and two ambers, and likewise with social and governance. So basically, you're saying that companies that operate financial sector and companies that operate in property sector, their risk exposure is totally separate and different. So what they need to disclose and what they need to manage also is different, and this is applied across for all companies. So property companies will have similar risk exposure. Finance companies will have similar risk exposure. This is what it means. Okay, next slide. Okay, I'll just take you through. These are some of the examples. That when you say what is the indicator that lies beneath all this theme that I put forward. So this is a labor standard theme. This is not an exhaustive list. This is just to give you a feel of what FTSE looks for when they do the assessment. So it is about they talk about policies that you have in place to mitigate child labor. This is labor standards, child labor, and you do not practice forced labor, all these things. So they'll look through your public domain to see whether you have addressed any of these issues. That's how they score a particular company. Next slide. So the same, this is for human rights, the same thing. All these companies will have a view of what they're being assessed on. So when FTSE does the assessment, they will give companies a chance to feedback and see whether or not what they pick up from the public domain is complete and comprehensive enough. So companies will know exactly where is it that they fall short and where is the area of improvement when it comes to disclosures that they need to ramp up. Next slide, just briefly, more examples. Next slide, please. Okay, this is health and safety. Next. Social supply chain, environment supply chain. So this is something that I think some companies are just starting the journey. So when we first started, a lot of questions were, what is this supply chain issue, environmental and social? Basically, it means this, companies, you have certain ESG standards when it comes to addressing your environmental risk, your social risk, right? So when it comes to social supply, your supply chain, you're basically saying that you're upholding your ecosystem, your stakeholders that deal with you, your vendors, you upholding them to the same standard. What you practice, you want your stakeholders, your vendors to practice as well before they can do business with you. This is what it means basically. Okay, so that is why when they say that our PLCs are at risk if they do not address ESG issues, because they are a part of the supply chain for MNCs, right? Because MNCs, they have gone really way forward. They have advanced a lot in this space, and they are asking a lot from their suppliers to ensure that they are complying, right? Okay, next, I think anti-corruption, just some statements that they look for that you are addressing all this. Next. Okay, so this is to give you a view of how you tabulate an ESG score. So disregard all the workings on the right first. Let's look at the report card. So this is the report card a company would get when they get the ESG score, right, from FTSE. So for example, company XYZ received a score of 2.8 for ESG rating. Remember the inclusion threshold was 2.9, right? So they are just a little bit off, by 0.1. If they improve their disclosures and such in the next review, chances are very good that they'll get into the index. So when you look at the second level, the pillar score, you can see that the ratings they did for environment, they score 1 out of 5, social 2.3 out of 5, governance they scored very well, 5 out of 5, perfect score. So then we drill down to the theme level. So where is it that they fell short? So this is where you can see where is it that they fell short. So you look at this company is actually operating in a sort of a low risk category, because you can see there's actually no high exposure for them, right? They are quite lucky in that sense. So you can see that for environment, they are only assessed on climate change issues. And for social, they only have two risks: human rights, labor standards, one medium, one low. And for governance, they only have for anti-corruption and corporate governance, both medium. So in order for you to calculate the ESG score, all these are risk-weighted average. So when you do a risk-weighted average, of course, mathematics come in the picture. So number one, you calculate the pillar exposure first. So you're basically summing up all the risk exposure, divide by the number of themes that is applicable to you. So for very easy, for environment, you can see that they only have one medium, right? Medium is a 2, level 2 exposure. So it's 2 divided by 1, get 2.0. And then for the governance, they have 2 risk exposure. One is medium, one is low. Medium is 2, low is 1. So 2 plus 1 divided by 2, 1.5, so on and so forth. And then number 2, you calculate the risk-weighted pillar score. So you have the ratings there, the ratings of you have the exposure, you have the ratings of 1 to 5, right? 0 to 5, right? So let's see, for environment, you only looking at climate change. So it's medium exposure 2 times a rating of 1. And then you divide by the sum of theme exposure level. Okay, so that is how you calculate the pillar score. So once you have these two, you fit into the table on top, which is you are looking at both an exposure level and of course a score for your pillar, right? So for environment, social and governance, you roll it up to get one single ESG score, which is the exposure weighted average of the 3 pillars. So you can see it's all mathematics. No, you don't need to learn it. I'm just taking you through this so that you know that the mathematics come in the picture when you calculate an ESG score. So that's how you work out to 2.8. 2.8 is 2.0 times 1 plus 1.5 times 2.3 plus 2.0 times 5 divided by the total pillar exposure, which is the 2.0 plus 1.5 plus 2.0. So it adds up. Everything when it's calculated, it's 2.8. So that is how you calculate the ESG ratings. Okay, next slide. Wait, hold on. Let me see if there's any. Okay, I have a question here. Hold on. Just let me read through. Okay, yeah, my colleague has answered. I have my colleague here, Tintin, that is helping with the Q&A, and because this is only a short 1-hour session. So any questions you have, now she will try to answer on my behalf as well. Okay, let's see. No, let's move on to the next slide. We are almost at the end. Okay, I've gone through all the technical things. So this is just to give you a view of who is on this FTSE4Good Bursa Malaysia Index. We have 76 companies, like I said just now. So this is the index component mix. So you can see that the perception is that a lot of it is dominated by large cap companies, but reality is that it is actually spread out across, because you also have small cap companies, right? That is part of the constituents. No, so you have it's actually a lot from the mid 70 and small cap. KLCI only 29%, and when it comes to sector rich, because like I said, there's no real sector exclusion. So it is quite spread out quite nicely, and even companies like plantation companies, which is subject to a lot of ESG requirements. Also, there are some companies who actually did meet the requirements. So this is a big achievement for them. Okay, I think I have a question from. Hold on. How important is social projects under CSR to an ESG ratings? So I would not say that it is not counted at all. I mean, CSR, it is more skewed towards social. As you can recall, just now, I took you through the pillars and the theme exposure, right? CSR, giving back to community, ensuring that you take care of the community around you and everything, is only a small part of the theme when it comes to social, the social aspect. So even if you do a lot of CSR, but you don't do anything else, or you do a lot of CSR and you publicize a lot, but you do not handle other aspects of the ESG, you will not score well in terms of ESG ratings because it's only a small component. Okay. Next, let's move on to the slide. Okay, I did say briefly, right, that no, the ESG index actually outperformed our benchmark KLCI. So this is proof of it. So looking at the charts right now, we are outperforming the KLCI by 3.4%. Okay. Next. This is a interesting slide. So when we first started the index in 2014, we only had 24 companies that qualify into this index. Right now, we have grown threefold. We are 76, and we hope to continue this momentum. But of course, it's getting progressively tougher. Because FTSE does from time to time review the criteria. They make it more relevant to development, recent developments and everything. So we are now at 76, and you can see that it's slowing down, but we are still trying. We are going out to meet PLCs to tell them about all these things, what they need to do and everything to ensure that they meet the requirements. And when a very good proof that companies have actually improved is not so much on the number of constituents, but also on the overall ESG ratings. You can see when it started, it was 1.31. Right now, it's at 2.33. It's a very good improvement. Okay, next slide. Okay. This is where any investors, any public audience who wants to get a view of which are the companies that are doing pretty well in terms of ESG in accordance to FTSE4Good, you can reference to this page. It is from Bursa's website. You go to trade tab and you go to indices. You look for indices, and you will see this page. This table that's on the left. You can see 4-star, 3-star, 2-star, 1-star, and the company's listing, right? So I did say earlier, FTSE4Good, FTSE Emas Universe companies will be given an ESG score. We have 76 companies that qualify into the index, but we have ESG ratings for about 300 companies. So this will be where you can reference how those companies are doing in terms of their ESG performance. We do not give the exact score. We don't give 3.0, 2.9. Rather, it is put in a quartile banding. So out of the 300 companies, if you're in the top 25% of your ESG scores, you get 4-star. The next 25% get 3-star, and then the next 25 get 2-star, and the bottom 25 get 1-star. Okay, so if you want to have a quick reference, you say you want to buy into this company, you just want to have that assurance that this company is on the ball, that they are doing things right, they are on track, to manage their ESG risk, you can refer to this. Okay, it's available free for public to use. I have some questions that just let me look through. Okay, yes, correct. Okay, what is the next change? I think my colleague has been answering. Thank you, Tintin. So I don't need to address those. Okay, next slide. I'm almost towards the end. So this is hot from the oven today itself, 5th July. We've launched the FTSE Bursa Malaysia Sharia Index. So this is our latest addition to the thematic index. It is an ESG index with a Sharia overlay. So this is derived from looking at the 76 companies that qualify into the FTSE4Good. We the OLE is the ST's Sharia Advisory Council's Sharia screening methodology to include only Sharia compliant companies. So this serves as a means for investors looking for converge ESG considerations with Sharia investing principles. Okay, we have 54 companies on this index, and it has gone live today. Okay, I have come to the end of my presentation. I think Tintin has been doing a great job at answering the questions. Let's see. Yeah. Yes, Jeanette.
Nama, I'll let you pick the questions first, or you and Tintin. And then we can proceed to our pop quiz if there's no more questions. Are there any more unanswered questions?
Let me see, look through the slide. Oh, okay. Oh, there's a lot of interest, a lot of questions.
Yeah.
Okay, let's see. Awards, yes, I think, awards, I think it's not something that my team looks at personally, but I think it's something that Bursa is looking into, because we do have, some initiatives to encourage more participation from the PLCs to ensure that they ramp up their game when it comes to sustainability and exclusion. What is that? I have a question about why lumber and forestry is not excluded. I said this is based on FTSE4Good's methodology, where the exclusion only applies to the 4 categories: the tobacco, weapons, weapon system, and coal. So the rest of it, it is not a. I would say that they are more inclusive, but it's ultimately up to the investors, to filter out which are the companies, what are the type of businesses they wish not to engage in. So I think that's the intent of the index, to make it as inclusive as possible, but also giving investors the leeway to make their own decisions. I mean, when it comes to controversies, I think it's not our. It's not in the spirit of ESG to actually come up and display the names, and shame people, but just that, we just want to give an assurance that companies that are embroiled in controversies, if it could be because they did not manage things properly, or it could be due to greenwashing some disclosures and everything, so they are excluded. So, but we do not actually publish the list of companies that are embroiled in controversies. Okay, VAT is actually not part of the index. They have an ESG score because they are in the AMAS universe, but because of that exclusion, they are not part of the ESG index. I mean, there are a lot of questions about index as well. Let me see. There's a lot of questions about, I guess there's some confusion about 98% of market cap, right? Okay, top 98% of market cap. You're actually summing up the market cap of all companies, the main market companies, and ensuring that they meet the top 98%. So even though you say that 98% is high, but actually looking at the so-called the cut-off, right? The ones that do not meet the 98%, those companies are actually quite small, and as such, they are more suited to get into the fledgling index. So that's why we cut off at 98% because it's fair, and it ensures that companies have that amount of liquidity to ensure that it's more actively traded. Because we want to ensure that these are the shares that that will be good to issue passive products on and so on and so forth. So that is why the intent behind this is ultimately is to craft an index product. So that is why we needed to have some sort of cutoff. I guess a lot of questions about how to sustain this ESG. I guess it's an evolution. It's a journey that we undertake. Because Bursa kickstart this 6 years ago by launching this index, and the gestation period that it took for people to come to accept this index, has been quite moderate in pace, I would have to say, So only in the last couple of years, because the institutional investors, especially the local boys, when they started to tell their investing companies that they are actually seriously looking at it, then did it really take off in a good way. So it's an evolution. We are fine-tuning things as we go along. We are trying to give more clarity, more information to the public, to ensure that they have the correct information when they want to put in ESG considerations when they do the portfolio selection. Okay, Jeanette.
Yes. Okay. Thank you for your presentation, and thank you very much for answering the questions. I know there's a lot of questions in Slido as well as on the chat, but we are running out of time now. So thank you everyone for joining our webinar today, and I would like to give a special thank you to Ms. Wong for speaking in our webinar. Don't forget, if you wish to watch this webinar again, we will upload the webinar on our YouTube channel, InvestSmart SC, in due course. Do check out our previous webinar sessions on our YouTube channel. I would also like to take this opportunity to remind everyone to beware of clone firm scams. Fraudsters will use names, logos, and other details of a legitimate firm to promote bogus investment schemes via social media, promising extraordinary high returns with little risk. If you're unsure whether you are dealing with a licensed registered entity and/or individual, do not hesitate to contact SC. Also, remember to never deposit money into an individual bank account, even if they are licensed or registered with authorities. Stay safe, stay at home, and if you need to be out, always maintain physical distancing. Hope to see everyone again at our next webinar. Thank you, everyone.